What's going on, traders? I hope you all have had a great weekend. It is Sunday, July 11th, and we're going to go through a bit of our daily plan coming into tomorrow and some things to watch out for this week. Before we get into it, reminder that this video is for educational and entertainment purposes only. So with that being said, we're starting off here with the Spider ETF, the S&P here, and markets were down just slightly on Friday, down about $1.11, 0.25%. Final print coming in at 438.55. And we had certainly a nice run up in the morning session with a quick sell off down right back to where we started towards the end of the day. So it was a great day for opportunities on both sides of the auction. Bears and bulls had some nice trades presented to them. So we're starting off here with the weekly chart. And first thing, I want to point out, as bears are starting to salivate over that sell-off towards the end of the day on Friday, oftentimes I talk about, measuring the move within a candle, the previous candle, right? And if you notice here, this last week's candle, full-bodied green candle, and if you've watched the videos before, we have talked about retracements within those candles, inside week to last week here. But what I really wanted to point out, and we'll talk about this 437 level again, of course, but just looking here, that 437 basically, the weekly swing low is a 50% retracement of last week's bullish candle here. So, we'll, certainly be talking about this 437 level a bit today, but, right off the bat, of course, holding this 50% retracement of last week's bullish candle, I think is still a bullish sign overall. Now, certainly we can break below, and there's some other levels we'll be looking at lower than that, but that's going to be, of course, our first step for the bulls. And, really, if they break below and we still continue to sell, just, always looking at that bigger picture, right? The weekly here, the 9-period moving average is down by 430.50 area. Okay, so, we really can't even start talking about too much bigger picture bearish activity until we even start to break that. So, I'm sure the like I was saying, the bears were getting all hot and heavy because of that sell-off on Friday. But bigger picture, they need to put their pants back on and calm down. But of course, we will be prepared for either scenario and be able to trade around them while we manage our risk. One thing I'd have to mention for the Bears, we are still watching this oversold reading here on the Momo Weekly. Very spicy still up here. Of course, as you can see, and as I always talk about, we don't take trades just based off of one indicator or one factor alone, but we definitely want to be aware as we are still having these pretty hot readings up here. Value area highs hanging out right above us. We've talked about that 444 area and 445 needing to get over this for that chance to push up higher. But that value area high is still sitting up right here on this weekly chart, up by 448.95, and we'll call it 449. So we'll definitely be watching as price comes into this area. If we do start to get into there, and we're still seeing these hot readings here on the Momo, okay, in that area I might get a little bit more interested in some possible direct shorts for a swing trade, but we are not there yet. And we'll see how price reacts as we start to move into that area if we do later this week. But we do have a pretty big data week ahead of us, and I wanted to mention a couple of those things. We have 3 speakers on Monday, July 10th, Fed Chair Barr. We have Daly speaking, and Messer, all on Friday, or excuse me, all on Monday. But really, all the eyes are going to be on CPI, which is Wednesday, the 12th. That comes out at 8:30, and we do have also some other Fed speakers uh, uh, giving talks. Fed Barkin is at 8:30 as well, and Bostic at 1 o'clock. We do have Fed Beige Book on 2 p.m. as well. Something to note there. Thursday, we start off with core PPI, again, which could have some chances to move the market, as well as initial jobless claims, and they both come out at 8:30. So we want to keep an eye on that. So let's dig a little bit more into the charts here. Let's close this. Let's take a look at the daily chart, because the daily, of course, looks a lot more ominous than the weekly chart. So let's flip over with this. Here we go. With this gravestone doji coming in, and markets closing just below the daily 9-period moving average here. So we'll see if we are able to close above this level maybe Monday. However, we all have to take, a lot of the technical analysis even more with a grain of salt this week, considering the major data events that we do have coming up with CPI and to a lesser extent PPI. However, PPI is still important, of course, as the Fed really pays attention to that data point more overall. So we'll see how the markets react to that, if at all. But still nicely above the 20 period here. We could have a date coming in to kiss it that is below that 437 area that we are watching last week's swing low. So we'll still be watching that 437, of course. But if we do start to get below, there's a chance, we have a date to come in here and retest that 435.80 area with that 20-day moving average right there. So we'll be watching that as well and see how price reacts if we do come down into that level. So the other thing I wanted to point out here, and let's go to some bigger picture fibs. I updated them just ever so slightly. Let's go here. As we've moved on, moved them into pretty much the swing low when we have broken over the bigger picture downtrend here. So move them up just slightly as price action and time has moved along. And the thing that really I wanted to point out, and of course we're dealing with daily charts and stuff like this, so this is kind of all more macro and bigger picture type of levels and analysis. But we were watching as well this megaphone breakout that when we were in this balance zone, we stayed in here for quite some time. But now it's setting up as time has moved along that if we do start to come down into that 430 area, 430.50, 430.61, we could have a very nice confluence here with the 23.6 Fib retracement lining up nicely with a back test of this megaphone trend line breakout. So we'll have to see as this week progresses if we do get a move down into this zone. Could be an area where I would be potentially interested for some either day trading longs or even possibly some type of a swing back to push us up higher again, since of course this is we're working off the daily here, so bigger picture type of stuff. But that area certainly is what I will be watching. And if we do start to break under, that would probably be a negative sign for the bulls in the short term. And we could see some further selling come into the auction. So I think that's pretty much everything I wanted to go over as far as the daily chart was concerned. Let's look a little bit more in depth now to a little bit more intraday type of plan and analysis. So let's get into that. All right, so let's come into our zones that we really have been watching here. Actually, is there anything else? Hold on one second. Let's just go over this really quickly here on our macro. Okay. Another thing I wanted to point out here, okay, we're back below this first pivot for the bulls that they needed to hold. We're back below. You can see earlier, we came into this other major macro trend line that was defended by the bears and kind of rolled us over and pushed us back down. We filled that gap during the morning, and then we came back down to fill it 2 times in a day. And I would say the fact that they filled it back down, I was hoping that we would at least hold 440, but we were not able to. But we still have this key area here in that 438 zone as another bullish pivot that needs to be supported for them to push price higher. But I could expect a trickier week overall as the markets may show some hesitation coming into the major data points. So let's all be aware of that. It's very possible that we trade just sideways in between these two bull pivots here, back and forth until data, and that very well may be the catalyst that breaks us one way or the other, depending on how the market interprets inflation data coming out on Wednesday. So, oh wait, was it Wednesday? I'm already forgetting. Or was it Tuesday? Let me see. I think it's Wednesday. Yeah, Wednesday. Okay, that's what I thought. All right. So you can see here though that 437, that look below and fail move, very nice as we came into that 437 zone, right at the base right here of this price action from the 27th, came right in, pushed back up. And if you notice here, let's go into the 4-hour chart really quickly. That 437 area right now holds as point of control on the 4-hour. So let's watch that. It's just right now slightly below that 437. So, once we get into that area, we'll be watching, of course, as that needs to be defended. We could have a fake break, maybe stop some people out on trying to directly buy that 437, come down and clip a little bit lower right at the point of control here, just slightly underneath that 436.70. Which I would potentially consider a direct buy there, but certainly a more of this type of move where it breaks below and then recaptures is the safer move overall. So let's take a look really quickly at the day trading fibs as well, and you can see this 50% retracement. So, if you didn't, want to buy, and I probably would exercise some caution. I mean, we could set up with a double bottom, you never know, but, really the safer move overall would be not even buying the 437, or maybe not even waiting for the recapture if we do start to see the selling, waiting to see if the 437.75, this 50% retracement here, is held. And then initiating the long trade. But if you're more interested in a little bit more safety, certainly for 39.30 area, recapturing this 38.2 extension would be an encouraging sign. And of course, that really is a zone there, because I would feel even more comfortable seeing 440 being recaptured before potentially initiating any longs. But it's very possible, that we see now again another 50% retracement of this candle, well, both candles, I should say, and trading back up into the 440. 45 area right here, confluence with pretty much the 20 period moving average on this chart, giving us a 50% retracement of this move, and then potentially heading back down. That is one scenario I will be watching out for, but we could just be trading back and forth really in between this area here. Let me just now I don't even know if we'll be able to test these swing highs, but that we could very well see price action kind of just trade in a new smaller balance. Come on, there we go. A new smaller balance like this, and you can see that 50% retracement pretty much right here in the middle of this smaller balance. So I'll be watching that as well. But the most confirmation that the bulls, or the strongest confirmation for the bulls, would be recapturing, that 440, 45 area. So we'll watch out for that as well. So really quickly, let's just go into our last. Let me just see if there was anything else I actually wanted to mention really quick. Um, yeah, I think the 440, 45, 50 area, yes, for sure. I think that's definitely worth looking at. But again, if you want even more confirmation, although the risk to reward gets a little bit skewed for me at this point, because we do have value area high sitting up here at 442.25 zone, but recapturing 441. 25, I think, as well would be a very nice sign for the bulls. But risk to reward is a little bit waning because we don't know how price will react. It would be the third time that we tested up in this zone. So, once, twice, thrice, the third time we could make it through. But we do want to just be aware because that is, of course, just, a total prediction. We don't know, of course, if this is actually going to break. So the risk to reward there is kind of skewed for me to take that trade personally. But I did want to point that out, as that would be a good sign there for the bulls overall. And maybe if we do get pushed over, that we work out this auction and maybe value area highs start to reset higher as more transactions happen into this in this area in the auction. But it's pretty thick right now overall. I mean, you can see a lot of volume coming in up in this upper part of the zone here. But right now we're sitting really in this lower volume node here into the close in this gap, as you can see. All right, so let's go really quickly into our last bit of the analysis, and let me go into this one. Let me flesh it out a little bit more. Okay, and let's extend. Let's extend this balance as we move along, and let's extend this balance. Okay, so we were talking in the previous video, I believe, when we sold off here down to that 437, that half gap of this balance zone, and that is supported. But when we sold off here, really, let's look at what's going on, right? We have low, higher, low, higher, low, higher, low, higher, low, and the bears were not able to push us back down into this 437 area. Be watching that, if we break under that 437, we do again have that volume point of control. As we were looking at that 4-hour chart, hourly point of control is a little bit lower, closer to that 436. So I think it's worth noting as well. But of course, under that 437 would be a short-term bearish type of a scenario where we might see moves back down into this lower part of this range here. But with this hourly point of control being in this 436 area, again, kind of a similar situation like I was talking about before in that 441 area with the value area high just above. The risk to reward for me for a short to come down and then have to deal with this big area here, this hourly point of control, really isn't there for me personally. As we get to these lower areas, it's probably where I would more, again, be interested in potentially some look below and fails or direct longs in this area, depending on your appetite for risk. But, the bigger picture overall, as we were looking at the daily and the weekly chart, that we are still bullish. I'm still more or less in the buy the dip zone. Until we really break this 435, if we start to get under that 435, definitely could be more of a warning sign there where I would get a little bit even more interested in shorts. But we have to note that and be aware that that 435 is a big area, and when we're looking at these bigger areas, of course, you can see a lot of those look below and fails, or look above and fails. In this case, look below, as we saw right here. They tried to break under. And they were unable to break out of this balance range. Sellers kept on getting absorbed here, and then we recaptured and push up. So would I be directly buying down here? No, I mean, it would cross my mind. It's definitely a bit more risky as it has been tested before. So probably the safer way, if we do start to test the lower part of this balance zone, would be if we break below and then recapture, really confirming those buyers are there, those bids are stepping in, and then trading back up. But if you have a little bit more appetite for risk, certainly this 435, 50, 60 area down to 435 could be interested for some direct longs if we do get down there. So, but right now we're hanging out in the upper part of the previous balance. So, as long as we can hold here in this 438, 430, 835 zone, we could potentially see some moves back up. Again, we'll be watching this 440 for those potential recaptures as well, for potential moves back up higher. We have to note value area highs sitting real close to our second bull pivot zone, or take profit zone, or whatever you want to call it. But value area highs is very close, sitting right now at 441.15, and we'll make that a little zone to 441.40. As we were talking about that zone earlier when we were looking at the fibs. So, we could run into some trouble here, possibly an area if you were so inclined and bearish to be short. If we came in here, I don't know about a direct short, again, that's completely up to you, but certainly if we broke above and then could not hold and came back down, kind of a similar scenario to when we came up here on Friday into this 442.40 area, tried to get above, could not hold above, and look above and failed, and opened up a nice short opportunity to the end of the day. So, very, very interesting price action there on Friday, making a full trip in and out of the gap 2 times, seeing squeezes on both sides. But as I was mentioning, with the data, the CPI definitely could lead into more of a tricky trading week. So be aware, probably not a time to be stepping on the gas at all, and just playing more defense and a bit more tentatively, as you don't want to get chopped up in inconsistent price delivery. So, so I think that's pretty much everything that I wanted to go over. So many things to touch on. So of course, I'm always just thinking, is there anything else I wanted to mention? I don't think that there's too much more that I needed to go over. I covered it all. So if you found some value in the video, feel free to subscribe to the channel. It would mean a ton to me. Smash that like button, really helps these videos get pushed out on the YouTube algorithm. And as I post it to Twitter, feel free to share as well. All right, well, I really appreciate you guys taking the time to prepare for the tomorrow and for the week a bit with me. And of course, we'll be back at it on Tuesday with further updates. So be careful this week with all the data, and take care. And I wish you the best trading on Monday.